Welcome to Accounting High.
We've created a knowledge hub, which is our brains in the practice. It's in Notion, and I tell my team what our target, our KPIs are. Everybody needs to add at least 2 things to the knowledge hub every single month. That's your KPI, which means that people are taking the knowledge out of their brains and they're finding new ways of doing things to say, oh, I've got a really good way of getting this data in Excel. Here is a process note. Here's a Loom video. It's in the knowledge hub. And that's not just going to help them now. It's going to help my future team members forever on end, in perpetuity.
Hi, class is in session. It's time for Shoperations at accounting. Hi, class is in session. It's time for Shoperations at accounting. Hi, kids. Hybrid teams, for Pete's sake. I'm trying to manage through screens, but I can't figure out which Zoom window's my next meeting. Well, since 2012, my firm's been in the cloud. Join us as we go deep. I'll try not to run it to the ground. We're sharing profit and loss and managing back office. The tax staff just quit. Tried to hire on LinkedIn, no luck. And scope creep, team count, CAS, automate tax, compliance, transactions, ID, and bottlenecks. Come on, ops. Scotty, wait a minute. It's my firm, dog. I know, and I said you could run it however you want.
Introducing the star of our show,
Scotty and Reza Hooda.
We're gonna have a problem here.
Class is in session. What's up, Reza? It's your 3rd time back at Accounting High.
Hey, pleased to be here yet again, as always, homie.
You're a regular now. This is your junior year at Accounting High. It's 3rd time hopping on. Typically, we record in July month, so this is a little bit early for us today.
Yeah, absolutely. Well, always a pleasure to be here with you. I'm surprised I haven't graduated yet, but hopefully that'll be happening sometime soon.
You don't graduate early. It's 4 years, just like anybody else.
Wow.
Got another year. So, Reza, we're here today to talk about timeless accounting. You reached out to me after I released the episode with Ed Mendlowitz and Ron Baker, where they were debating timesheets. And you said, I have a way to do it without time. I've been doing it at my firm with no time for years. We could talk about that. And I'd love to talk about that. But there's other stuff we could talk about too, just regarding time and the pillars of running an accounting practice. I understand you've written a book. We talked about it last time. We could talk about that again too, the 4 pillars. I also understand you got half a mind to potentially develop a software company too. So we might even dive into that as well. It's going to be a lot different than writing a book, I can tell you that. Thanks for joining us today. Students, you're in for a treat. You're going to learn how to do some timeless accounting. So Reza, you have a practice, you have an accounting practice. Give our students a little rundown of the size, approximately how many years it's been in operation.
Sure, absolutely. So I have been running the accounting firm now for about 15 years. Prior to that, it was a small firm based on the south coast of the UK, so around Hampshire, in between Southampton and Portsmouth, for anyone that is familiar with this side of the pond. I bought the practice from my father-in-law, who was looking to retire after having trained with PwC. The practice was doing around about, let's say in dollars, $200K when I bought it. It was very small, 2 or 3 team members at the time when I bought in 15 years ago. Now the practice is around 1.3 mil in terms of dollars wise. We have a team of 8 in the UK plus 2 or 3 in the Philippines. And I have completely extracted myself from the practice. It operates around about 50% net profit margin. We don't use timesheets. I actually, with hindsight, quite stupidly implemented timesheets after I bought it. So when I bought the practice, there was no timesheets. But I came from PwC where they did timesheets. So I thought that's the thing to do. So as I mentioned, my journey when I first bought into the practice, I had no clue what I was doing. I did all the wrong things, including using timesheets from my perspective, charging by the hour. Then when it came 5 or 6 years in, we went out of business. I came across a mentor. I realized that actually there's better ways of doing things. I went on a journey of learning and discovery, learning about marketing, sales, leadership.
You went on a pilgrimage,
absolutely,
so to speak.
Yeah, made the changes and then transformed the practice to what it is today, to now give it is million plus. I'm out of the practice as well, and I do what I love doing, which is coaching and mentoring other accountants. So the starting point was there was no timesheets. I implemented timesheets. So when I came, it was very much it was a paper-based traditional practice. So I started to implement systems, cloud software, workflow software, all that kind of stuff I was implementing when I first joined back in 2008. And as part and parcel of the software that we brought on board for practice management, there was a time logging portal there. So I thought, okay, well, that's there. It means we must have to use it. So we started using it like other firms do. And I got everyone to start logging time. And then what that does is, again, it's inextricably linked in terms of how you price and whether you keep time. So if you're keeping time, you're always going to be tied to the notion that cost or time is a factor when I am pricing, whether you like it or not, because you are logging time. And inevitably that happened. We had some clients that were on fixed fees and they got paid monthly, but where then we would look at recovery rates by looking at, right, okay, what's on the clock versus what we charged? Have we made a profit? Have we made a loss? And then for clients where there was no monthly engagement, it would be, right, what's on the clock? Let's charge that out. But I've since gone on a journey to realize that actually nobody cares about costs. Nobody cares about time. Nobody cares about effort.
Except for possibly the owner. The owner is using that in certain ways. You were leveraging the data that you had and trying to figure out new prices based on that, or it was one of the tools in the toolkit, as my team likes to say. I didn't intend for them to start doing this, but that's exactly what happened, what you just described. We were not tracking time. We started tracking it. I left the firm, or I exited to go do my own other things. They started using that data to then come up with future pricing for clients that this will roughly take us 3 hours. So let's just price based on that. It's exactly what happened. And that's what we talked about on that episode with Ed Mendlowitz and Ron Baker. And you're saying, did you notice that? At what point did you decide I've bastardized my whole system here or the firm and now I need to remove time? At what moment did you realize that?
So it wasn't until I went on a journey of learning about pricing and pricing psychology and behavioral dynamics, economics from people like Ron Baker, Mark Wickersham, and I started to implement value pricing, subscription pricing into our firm. We had that going, and then it got to a point in 2018 where I also came across the work of Jody Thompson and Callie Resler, the book Work Sucks and How to Fix It, the Results Only Work Environment. So in 2018, we moved to something similar to the results only work environment, where there are no hours anymore. You don't have to do a 9 to 5 because I don't care about the work. I don't care about the time that you clock. What I care about is the results that you produce, the work that you do. So when we moved to that environment, we had to get rid of the timesheets because those two things do not align with each other. If you're no longer requiring anyone to come into the office with 9 to 5, then you don't actually need them to do timesheets because you're not measuring them on presenteeism. You're not measuring them on them sitting at a computer between the hours of 9 to 5 and clocking hours on a timesheet. You start to measure results, which means that you have to get much better at figuring out what is the results that you expect your team to deliver, what are the outcomes you expect them to deliver, and hold them accountable to those results as opposed to the time that it takes to get those results.
So what were some of the results that you started tracking?
Well, kind of moving away from work means just come to the office between the hours of 9 to 5, clock hours on a timesheet, and therefore you think you've done work. Work is now, we have a finite number of clients. We have finite amount of work to do. So let's divvy that up between the people that we have in the firm and allocate the responsibility of doing that to individuals. So now, for example, client managers, they have a portfolio now. You are required to look after this portfolio of clients, which generates feeds of X, which is around 2, 3, 4 times what I'm paying you. And therefore, I know I'm getting a return on investment from what I am paying you. And you are delivering value to the practice because you are managing a portfolio, which is 3 to 4 times the size of your salary, right? So that's how you then determine, okay, you as the owner, you need to know whether you're making a profit. You are incurring those costs of your team, whether you like it or not. And they are fixed costs. And again, this is another concept we have to get out of our heads because cost accounting as we know it is a flawed concept. And this first one, it blew my mind when I first came across the works of a guy called Dr. Reginald Lee. He's been on Ron's podcast as well. Sadly, he passed away, I think a year or two ago, but he was on my podcast about 2-3 years back. He wrote a book called Lies, Damn Lies, and Cost Accounting. And the whole notion of cost accounting was thrown apart in the fact that there are things like cash costs and non-cash costs, and we often use non-cash costs to put numbers on things where there's no relationship for things, no mathematical relationship between two figures. So, for example, we're going quite deep here, and just stop if we need to clarify. Let's say I take on a client, right? And the fee I quote to that client for doing his tax return is $1,000. We do that work within our existing firm's capacity. We log the time for doing that particular tax return. When we look at the timesheet says that we spent $1,500 of time doing that tax return. So the timesheet says that you've lost $500. But have we actually lost $500? We got a client in who paid us $1,000. We spent time on it, but we didn't incur any more money to get that tax return done. So actually, I haven't lost any money. In fact, I have made $1,000. I took $1,000. I didn't have to recruit anybody else to do that work. The work was done. But my timesheet says I've lost $500. I haven't lost $500. I've made $1,000. But the question there that we need to be asking is, could we have made more than $1,000 with the existing capacity that we have? And that is a pricing and positioning issue, more of a positioning issue in terms of how we positioned in the marketplace in order to attract the right type of client that will pay the kind of fee that will earn us a greatest return on the costs that we are incurring anyway. The fixed costs of people, software, and overhead in terms of time. So these are the costs I'm incurring anyway. Trying to then apportion them between clients is an arbitrary exercise. It doesn't actually give you the information that you need.
You're also looking at variability between team members too. So what one team member could do and what you pay that team member versus the other that could do it maybe, let's say, in less time, and you're paying that person less, just an example. Like that, the time doesn't give you any kind of comparative nature of those two people. You're just attaching the time to that task. When you said we look at the person who's managing the portfolio and we look at the profitability of the portfolio, isn't that the cost? And you're still using cost plus pricing, but just on a larger scale. It isn't just incrementally by hour. You're just doing it by person.
Not really, because what we're looking at, costs don't drive price. What drives price is what the customer is willing to pay. The customer couldn't care less about your effort. Whether you spend 10 hours on his work or 20 hours or 30 hours.
Well, you're talking about pricing. I've never, I guess you say inherently you end up bleeding in the pricing with the hourly. That just tends to happen if you're tracking the time. But when you're not tracking the time, then you're forced to price based on the value, but you're still in some ways pricing based on what capacity does that team member have. How do you come up with the value if you're also paying your team a certain amount? You've got these buckets of team portfolios. How do you structure that?
Client managers.
In a way, that's your cost, but you're still not associating that with how you're pricing these tax returns.
So prices don't come from costs, but prices justify the cost that you can incur to make a profit.
Okay.
The other way around, right? So price is a function of your positioning in the marketplace. Mm-hmm. I know if I position myself as an expert, as a specialist in one particular area. So we did this marketing test with Capture Accounting, where we launched a new brand a couple of years ago aimed at content creators and influencers. So we put ourselves out there as the experts for this particular space and targeted that niche. What that meant was that we have a higher perceived value, and we are attracting people who want to work with specialists who feel that we can add more value. Mm-hmm. And people pay a premium to work with specialists, which means that we can charge a much higher price than what the generalists are charging. So the positioning in the marketplace drives up the price that I can charge to clients. And what that means is that the rate at which I need to take on cost reduces. That is the aim in terms of how we go about making these decisions, how the rate at which we take on cost. So I know if I'm specialized and I'm getting this price, I know my team can handle more clients in the same niche because it's the same work. It's easier to do the work managing the same type of client than it is trying to serve 57 different industries, because they then pull from pillar to post and you're not getting charged as much as well. So when you niche down and you position yourself as an expert, you get paid more. Your team can then handle more clients. They can have a bigger portfolio each. And then what happens there is there's that big healthy profit that jumps out for you at the end as the owner. So the key is really, it's all about positioning, knowing, because your price has nothing to do. Your price is not a function of cost or time or effort. So we need to get away from that and think, how can we position ourselves to get the highest price possible? And then know that the team that you have will be able to manage it. And as their capacity is then taken up, then you can recruit, but then you'll still be able to recruit at a rate which is much slower than what you are able to charge in the marketplace, which is a function of your positioning in the marketplace.
So it all goes back down to pricing, positioning, and that's where you're going to drive more profitability. And that goes back to rethinking how you're running the practice, which is what you did. Now, you said this was 2 years ago. It was like an experiment. Are you still doing that capture accounting?
Absolutely. And it's the fastest growing area of our practice now.
Fastest growing area. Now, the other area, is there still another area where you cater to general businesses?
There is. We get referrals from existing clients.
Are you charging the same prices that you're doing with capture?
Exactly. And that's what positioning gives you. It gives you that confidence to say, well, I can get these kind of prices from this specialist area, and therefore gives me the confidence to charge those prices to every client. Mm-hmm. It may not be for everyone, but if we have a referral and we price them the same way and they're happy to work with us because we've come highly recommended, then so be it. We'll still take them on, even though they're not in that particular space.
So do you have a real life example of prices that you were charging prior to the positioning and after?
Yeah, so our average fees were probably in the region of about £2,000 to £3,000 prior to positioning as an expert. Now they're closer to £10,000
per year, like annual.
Yeah, annual. Yeah, so it's a much higher. It's kind of a 4 to 5 times increase in terms of average fee per client.
Mm-hmm. It's interesting because I did that all in the years of without tracking time, and we were roughly averaging 10 to 12,000 per client, same firm size, everything. All the metrics were the same. We weren't tracking time. And as I exited and when we started tracking time, our average is about the same, but our close rate is a lot lower. I think our close rate's lower. We're still taking on general clients. We don't have any kind of positioning, and we're still able to land those prices. It's just fewer. And that's what they're kind of basing our baseline foundation prices on. And in my mind, I think we could be getting a lot more. If we threw away the time and then we did positioning, now we could probably get more than 10 pounds, 10K per client as an average if we were to just rethink all of this again and restructure our positioning and our value. And that's what's getting me excited about potentially going back into my firm and tweaking things up, tightening some things up and going back and starting to find some new ways again. I don't think the time is hurting anybody. I don't think anybody's complaining about tracking time. It's really easy in our practice management system. So there isn't any of that other stigma associated with time that most people have in the profession. I think most people will blame the reason they left a certain job is because they had to track time. That's what they point at in the larger firms and the larger practices. Time is always, Ron always says time's the cancer of the profession. And I found my team that actually likes tracking. I had to push them to track it because they had all that PTSD from other positions that they've had in accounting, and they hated tracking it. Now they all actually don't mind it at all. I think if I said we're going to stop tracking it, that would cause an uproar because they don't like change. What did you run into when you kept trying to change certain things with your team? How did you effectively go about managing that change and making those changes without causing an uprising?
Yeah, no, great question. And over the years, I've implemented so much change and kind of been through that process. And
Yes.
you get disgruntled employees, and they will hate you initially, but after a while, they will, we're the entrepreneurs, so we see things sometimes that they don't see. So it's just about, look, we're doing this, whether you like it or not.
Their view is a little narrow. Their viewpoint is what's in front of them right now.
Exactly. And you're right, they don't like change. But sometimes change is a good thing. If we didn't change in the practice, they'd still be using manual ledgers and Sage Desktop if we hadn't transitioned to the cloud, 10, 15 years ago. So, change is required. And sometimes...
Well, or they still wouldn't be tracking time because you're the one who introduced that.
Exactly, yeah. They didn't like it when I brought it in. They didn't like it when I took it away again. So, but now they're fine. Now they love it. So it's one of those things. And efficiency, this is the thing, because most practice owners think that if we don't track time, how do we know, what's taking us longer? How do we get more efficient? That's the big question out there. And if we don't have time, how do we do that?
Accountants love efficiency.
Absolutely. So let me give you the answer. To me, efficiency comes from, and I put this in my book, and I've written a whole chapter on it, but I'll try and summarize it into one sentence. Efficiency comes from capturing and sharing the intellectual capital, aka knowledge, from your head and your team's head. That's how you get efficiency. So capturing and sharing the intellectual capital and knowledge from yours and your team's head with each other. That's how you get more efficient. Where is the incentive for someone to go out and find a smarter way, more efficient way of doing things? Indirectly, when you do timesheets, you're going to have reports like utilization, recovery rates, things like that. So excuse the employees' minds because they are being tracked, they are being assessed on metrics which are not conducive to the progression of the team as a whole. Whereas if there's no timesheets, and for us, for example, we have a knowledge hub. We've created a knowledge hub, which is our brains in the practice.
Kind of like your GPT for the practice.
Yeah, so that is where it's in Notion. I tell my team what our target, our KPIs are. Everybody needs to add at least 2 things to the knowledge hub every single month. That's your KPI. Which means that people are taking the knowledge out of their brains and they're finding new ways of doing things, and they're helping each other to say, I've got a really good way of getting this data in Excel. For example, here is a how-to guide on this. Here is a process note. Here's a Loom video. It's in the knowledge hub. So that knowledge hub is building up from our current team members, and that's not just going to help them now. It's going to help my future team members forever on end, in perpetuity. So it is expanding our knowledge base. It's expanding our intellectual capital. We are all getting smarter and more efficient because we are capturing and sharing that knowledge that we all have in our heads with each other. And that's how you get more efficient. That's how you drive efficiency, not through tracking time on a time.
I love that metric. Do you go over the things that are added with the whole team, like in meetings or anything?
Absolutely. Yeah. So one of the requirements of the template we've put in there is there is a creator, so we can see how many process notes are being added by each team member. But then there's also another metric which is used by. So it's not just a case of, okay, I've done my bit. You've got to go in and somebody's got to test your system. So somebody's got to use it and see how easy it is to use, and then tweak it, expand it, give you feedback on, okay, I didn't quite understand this, or what's the next step? Could there have been something before that? So it's constantly evolving, and we're always looking at it. It's always front and center of our meetings because that's what's important. That's what's really going to drive efficiency for us internally.
So since you've been on this pilgrimage in 2018 and you started adding these types of new things, what kind of pushback were you getting from the team when you said, okay, now we're going to do this? Or how long did you wait to implement the next new thing?
Yeah, so the pushback is always going to be there. I got pushback when I got rid of the timesheets, but you're always going to get that. I didn't actually implement the Knowledge Hub until sometime later, until I kind of figured out an easy way of doing it that would make it, that would bring about a friction-free way of them to start sharing that knowledge. So I found a way in Notion to be able to do it, and then we trained everyone up, and then we got them to, it was part of everyone's KPIs. They had to do it whether they like it or not. We went through a process of getting the team to become comfortable with doing Loom videos. There are some people on the team who hate doing video, but it's a necessary. You got to do it. Just like if you had timesheets, you'd have to do a timesheet. Well, in my firm, you don't have to do a timesheet, but you have to do a Loom video. You don't have to show your face, but you've got to be comfortable doing a Loom video because that's how we learn. That's how we learn from each other, and that's how you ultimately are going to save time because you are putting down your process of doing something. So if you're not around, somebody else can do it. over time, we can take some of the tasks that you are doing and delegate it out to a junior member of the team so you can focus more on the client relationship side and you can do the more exciting stuff because you've documented what you're doing and therefore that could be passed on to somebody else in the future. So it's all about kind of selling them the benefits, just like we sell benefits to our clients. We've got to sell benefits to your team. How is it going to benefit you?
You're helping them elevate too and delegate certain tasks that they were doing, and you're helping them up level their skill sets so they can do more. And I noticed that you're finding ways to utilize time savings without even tracking it. And that's the other thing is you've got an entirely new system that you're going to derive and measure value within your team and for your clients. And that's one thing that I think most accountants have a hard time grasping is the concept of value and delivering value and measuring that. And I think that's the one thing that you attacked early on, initially in the beginning, is creating the value through your positioning, through your marketing, through that lens. And once the value's there for the client, the client's paying that, you've captured that. Now you want to capture the value your team is giving on that end and make sure that they're in the most highest leveraged positions they could be. And so you're upskilling them. You're putting them in positions where they're directly working with clients. Do you work with any clients anymore at your firm?
Zero. I don't work with any clients. In the last year, I think I've had one email from a client in the last 12 months.
Yep. And that's not including your clients for the profitable firm or what profitable.
No. My coaching and mentoring business, that's a separate business.
Those are different clients, right? Yes. So you've created a different business with different clients, but your firm clients, the ones that you were working with pre-2018, let's just say, those you're not dealing with. What is your role right now at the firm?
Good question. So my role is, I love the Sinek quote where he says that as a leader, your role is no longer to do the work. It's to manage the people that will do the work. So we move away from managing the work to managing the people who are now responsible for the work. So my role is to oversee and to be ultimately responsible, but on a day-to-day basis, because my approach has been to hire top heavy. So I have more senior client managers than I do juniors, because the benefit of doing that is that they don't require training. They don't require as much support. They can handle client relationships. And then as you grow, they can then train the juniors that we then hire and you don't have to get involved. Whereas most firm owners, they do it the other way. They don't want to invest heavy in getting somebody in at a senior level, so they invest in a junior, which means that they can't hand over to client relationship. They're still doing the reviewing. They're still doing the training. They can never actually extract themselves away from doing the on-the-business stuff.
And why do you find that is? Why do most firms owners do that?
I think it's just the risk-averse accountant mindset that, I cannot afford to hire somebody in at that level, and therefore I hire somebody in junior, but then
protecting the margins and protecting their pockets too. So,
but they don't appreciate opportunity cost, right? It's like, how much time are you still spending in the practice, and what's that worth to you?
Right. But that's the hard thing to grasp too. That in that early stages, you're like, well, I can make a lot more money if I just hire these lower level people to continue to get all the work that's burdening me. So they're trying to remove themselves from the lower level work, but then create a bottleneck for them, and all the higher level work has to go through that owner, or maybe just one or two people. You have one one person that could review over a whole team of like 10. And so that creates bottlenecks, and then you can't effectively deliver good service because you're the bottleneck. You're the problem. And a lot of firm owners run into this. Tell me about the makeup. You've got 8 team members and then another 2 outsourced. Of those 8, are there any that are not doing any client work?
So of those 8, we have 4 client managers who have their portfolios, and they are supported by 3, I'd say, assistant client managers. So you've got 4 client managers where the ultimate responsibility and accountability for clients lie. So when a client comes in, this is your client. I don't want to know. This is your client. I'm holding you accountable to delivering everything that we need to deliver to keep this client happy, to make sure all the work gets done, to make sure no deadline gets missed. I have this ladder of accountability where my team know that when they come in, they are first and foremost responsible, not to me, but to the client. Secondly, they're responsible and accountable to their colleagues. And lastly, they're responsible and accountable to me. But I know that if clients are happy, if colleagues are happy, then ultimately I'll be happy. But all the firm owners, they have this fear of, I can't give away that relationship, that control, because what if the team member runs away with my clients? There is always that thing.
It's also a common misconception because you've created systems around that. Do you have anybody in sales or marketing or other areas of the firm? Sounds like those are all operations and handling the work operations. Do you have anybody else in other areas too?
Yeah, so this kind of stems to the previous question you asked in terms of what do I do. So I am still responsible for marketing, and I enjoy that anyway. And what that helps me to do is I'm also coaching and mentoring accountants in terms of how to generate leads and clients. I use my firm as a playground to test things, and things that work I then share with my accountants so they don't have to go through the pain and waste time and money doing things the wrong way because I've already done that for them. So I still do the marketing side, but I have now coached my team members to do the sales side. So I'm out of sales, I'm out of pricing. So the client managers now, they're getting the leads that I've generated through the system that I've put in place. Let's say, for capture accounting, I have a marketing system where we generate leads through the value that we've already delivered in advance. So we are getting in front of our ideal client. They are now going through a filtering process. The ones that meet our criteria are being given the opportunity to book a call with my client managers. Then it's my client managers then having those conversations and pricing them live on that call and then converting them to a client. So new clients, I don't even see these days. And my role is to coach my client managers on having better sales meetings. So I've gone through that process where I've upskilled myself. I know how to sell. I've been through the process of working with sales trainers, upskilling myself in terms of how to sell most effectively. And I'm now transferring that knowledge to my team. So I get my team to record their calls using Fathom AI. We will then go through, how did you do? What was, maybe you should have said it this way. I have scripts that I use that I share with my accountants audience anyway. So I share that with my team as well. So my role has become now coach to my team to make sure they can do everything that they need to. And they are upskilling themselves in the skills that they need to be able to do the best and generate value for the practice.
That's beautiful. What's the compensation policy for that? Do you give them commission on the sales or how does that work?
I do. I give them, as a little sweetener, any new clients that come on board, they get 10% of the first year's fee.
10%. That's exactly what I'm doing. And that's exactly how I've done it. I haven't gone as far as having coaches and doing the Fathom AI type stuff, but I do have people managing sales and all new revenue that they sign on 10% of that first year. So all first year new revenue, but it's two people that are divvying up those responsibilities and they're handling it rather than the team that's doing the work and the 4 people that are doing it. It's very similar to yours, but I have 2 people above all those 4 that are managing the operations and the sales aspect of it. We don't even have a marketing department right now. I haven't been doing that, but that's my next thing. That's what I think I need to do is figure out who is our person that we are marketing to. Who's our ideal client persona? We have never figured that out because I don't want to make a choice. I don't want to choose just one. So when you chose those content creators, it also sounds like you were doing something that you were interested in too. You were creating content around that time. That's when you started doing a lot of your LinkedIn stuff and creating this other persona. So you realized that's the type of person you want to, and we talked about this on your previous episodes. That's why I'm kind of just filling in the blanks here. And I love that because you went into it with intention and you started growing a separate part of your practice. You still had the general, but you grew this other part that you could prove this theory would work. So it isn't, none of the things that you're saying are theory. This is all backed by hard evidence and trial and error. You've made your mistakes for everybody else to learn from, and you've created this whole organic way of building a firm while also teaching how to do that too. That's what you did with the 4 pillars. Now, it also sounds like you're going to be solving another problem with this software, because one thing that you do is you still have one-on-one time with your team. You're using the Fathom and you're doing the sales coaching and all that. But what if your team had a tool in their hand that they could use for the pricing, And for the proposal presentation, tell me a little bit about your next foray in the future here.
Sure. This is hot off the press. It's literally, it's an idea that has been brimming in my mind for a few weeks now, but it's when you have an idea and it doesn't go away.
Yes,
and you're constantly
I know.
thinking about it. And you think, okay, fine, well, it's not going to go away. I need to do something about it now. So in the last couple of weeks, I've been having conversations with developers because I have no idea how to create an app, how to create software, but I have tried to kind of learn a little bit about what's involved, what's the approach. And now I am just about to start the journey of creating software, pricing and proposal software. It exists in the marketplace at the moment, but we find that the current players in the marketplace, the products are going downhill. And
don't have enough life in them, injected in them, and they're starting to get stale. Is what you're saying.
Absolutely. So, this is something that I'm very passionate about. I can bring my thinking in terms of because you have tools at the moment which either give you one price or give you three prices. I want to bring in the thinking that we can do both. So have a tool that gives you the ability to give three options, but also just give one price if you want to give one price, and bring in all the thinking and the stuff that I've learned on pricing psychology, behavioral economics, and create an academy within the software as well. So not just giving a tool to accountants, but giving them the training, the mindset, and the step-by-step process and tools to be able to go out there and charge higher prices and be paid for the value that they are creating in the world.
So there's two people that come to mind when you're saying this, and there are two people that I follow in the UK as well, and that's Mark Wickersham and James Ashford, who have both successfully done this. Mark Wickersham has the Pricing Academy. He's written like 4 books on pricing, and that's all he does. He doesn't even have a practice. He just focuses on pricing. He's got a podcast now. And then you've got James Ashford, who was a magician, and he leveraged that into becoming the best salesperson in accounting in the world and built out his whole platform. And it sounded like what you're doing is very similar to those two fathers of like the pricing software. But both of those were tools that I wanted to use in my practice. And we were already using Ignition at the time, and Ignition was working. We had our 3 options that we were giving, and all that stuff is working, like I said. But I wanted something that had a little bit of showmanship and like some flair and things that you can do with the client that were just wowing them. And the only things I saw in the market, the only real thing, I narrowed it down to GoProposal. And right around the time that we were going to go into and start using it is when they got purchased by Sage. And I had an inherent feeling that things would change then. Once you get absorbed by a much larger company, it may not be as impactful. And I have a feeling that sounds like that's sort of what's happening. You're going to come in with your superhero cape on and save the day here. So I'm excited to see what you're going to create, what that's going to look like. It'll take some time for sure, and money. But I think money more than time is your next venture here. But it sounds like you can leverage all the things that you're doing with your accountant community and use that to also build this too. You can create these academies, boot camps, and other types of things to teach. And you're already doing it. You're already teaching them how to become better pricers, position themselves better. So it's going to be very organic the way that you build this. So I'm excited to see what's next. Is yellow going to be the color of the app?
Yeah, I wasn't expecting it to be, but there is someone I had a conversation with last week. They actually went away and put together some pages of what the app could look like. And they, without me giving them any direction, they took the yellow from my book and actually used yellow in those pages. So you never know, it may be yellow, but I'm looking for a name at the moment. There is no name out there. And actually, like I said, this is hot off the press, but I feel that there's no turning back now because you've now announced it to the world. So this is now my accountability that there is no tracking back now. And now Scotty's mentioned it on his podcast. I have to do it. But a lot of respect for those guys. Mark was my original mentor, good friend of James.
And you do have multiple colors that you use because the Reza Hooda, the logo and all that, it's got like a crimson and I think a navy blue and stuff. So you're going to find that probably yellow is the best suited for what you're doing because it's like bright, the sun, yellow's fun. What's her name? We Are PF, Karen Rayburn, she uses the yellow too. So as long as you don't use it with her aqua maroon green or whatever mixed in with that, you'll be fine. And it's differentiator because not too many people are using yellow in the accounting app space for sure. I wish you all the best with that venture. How are you going to manage your time? So one thing that I always like to talk about, we've talked about this past 2 times, is your schedule too. And you're very strict about that and your routines. Tell me how those have evolved since the last time we spoke.
Yes, they've pretty much stayed as they are. So I still have my mornings free for my deep work. I don't have coaching calls until afternoon. I don't have very many of those these days because as I encourage my members to do and accountants to do, is to, as demand increases, increase your prices. So I have very few one-to-one clients now, and most of the members in the Profitable Accountants community are on my one-to-many program. So it's the same things that I'm delivering on a one-to-many scale every month. So I'm delivering the value that I need to my community, but it is not taking any more of my time away, which means that I have hours available to pursue another project, which is also going to be of value to my audience, my existing members, and other accountants out there. So everything is complementary.
Yeah. Well, we got to plug the book again because you spent hours and hours on the book. You've been doing some amazing promotion for that. So how many books have you shipped out so far? Like just on the freebie ones that you gave out?
Yeah, I think it's over 1,500 now.
And you've sold books too.
Yep.
You got it on sale on Amazon. So this is the
The
4 Pillars.
Yeah.
The 4 Pillars by Reza Hooda. Check that out if you haven't seen it yet or heard of it. It's a very compact book, foundational structure of a firm, building a firm, anything that anybody could apply. It's not specific to UK at all. This is universal principles for anybody to use when building a practice and learning the foundational structure. It's the same stuff that he's talked about on the show a couple times. And today, I haven't written a book yet because you've already written it. That's what I've been saying. Last time you were on, I said, I'm still going to write this book, How to Rap, but it's still going to be based similar principles too. Today, we're talking about timeless accounting. I appreciate you coming on and sharing all this with our students, with me too, because I'm learning so much every time you come on. This is our junior year. Reza, what's some closing statement that you can make for our students that are struggling in their practices right now? Give us some tips to send off.
All right, sure. No, I think that the time we're living in is the best time ever to be an accounting firm owner. There has never been a bigger opportunity than there is now to be able to set up or grow and scale an accounting firm ever in the history of our lives. And the reason being is that we have the tools in place to be able to service clients anywhere in the country or anywhere in the state. If you're in the States, you have the ability now to go after a very specific audience. To take on board the stuff that I've been saying around positioning, because that is key. Capture Accounting came from nowhere and grew to a multiple 6-figure brand in the space of less than 18 months. So that proves that you don't need to have been in business for 20 years to earn 20K fees. You don't need to have multiple offices all around the country to be able to get those kind of clients. And you don't need to have all the experience under the sun and have so many qualifications, etc., and team members to be able to grow a firm. What you need to do is really understand who it is that you want to go after, understand their problems, become an expert in an area, go inch wide, mile deep. That is the key. And you'll be able to attract those premium clients. Once you attract those clients, the servicing is easy. Doing the work is easy. So
we all know how to do the work. That's
absolutely.
Not our
Everybody
problem.
knows how to do the work.
Yeah.
Focus your efforts on upskilling yourself in the fields of marketing, selling, pricing, and get those clients in because you can absolutely do it.
Dope. Well, students, you heard it here first. That's what you got to do. This has been beautiful. Class dismissed.
Okay.